In this video, I'm gonna give you 3 LEAPS call options to buy to double or even triple your money in a pretty short amount of time. I'm even going to show you where the stock needs to pull back to for you to enter these LEAPS. Now, most people don't do that. They'll just say, hey, buy these LEAPS, and then by the time you watch the video, the stock has already rallied. Now, I'm gonna show you exactly where and when I'm going to be getting into these LEAPS. So let's go ahead and jump into it. As you can see, the portfolio is at another new record all-time high. We have already recovered in this portfolio. QQQ is still down probably 4 to 5%, but we are up pretty significantly. In fact, this month alone, I'm up 15%. So 873,000, and that's because we were selling cash secured puts during this crash and also buying LEAPS options, which I'm going to show you right now in my Discord group what my clients have been doing. As you can see right here, I have 2 specific areas in my Discord, my mentorship, which includes the Discord, Ryan's Trades and LEAPS entries and exits. And my clients have been following those. As you can see, Chad in 3 days made $42,000 in profit. Jason right here made $16,000 in profit. And Kevin even cleared over 100K in profit this month. So pretty crazy to see awesome client results that we post here in the Post Your Profits channel. So if you want access to that, make sure to click that very first link in the description. But let's go ahead and jump into it. We're gonna go ahead and dive into the market first. I'm gonna talk about QQQ, the VIX, and then we're gonna dive into the 3 LEAPS call options that I will be purchasing on any pullback. So let's go ahead and dive into it. QQQ. It just seems like this thing keeps going up, right? I already said that we're most likely going to go to all-time highs within the next 4 to 6 weeks. V-shaped recovery. Obviously, tariffs came in good. There's been a deal with China for now, and those tariffs have been paused for, I believe, additional 90 days. So this is a good thing, right? The economy is looking great. Numbers are looking good. Inflation numbers lower than expected. So you could definitely expect the stock market to continue rallying from here, but I do think that, every time we hit this upper Bollinger Band on QQQ, the probabilities of going up another day become less and less and less. So I do think that either tomorrow or Friday or maybe even Monday, we will get a nice pullback and a relief from this mega bull rally, okay? And when that pullback comes, that is when we're going to be getting into these opportunities that I'm gonna show you, okay? So I'm expecting, potentially we go up one more day tomorrow, and then we get a little pullback here, maybe to 510 on QQQ, and that's gonna be the zone to be loading up on these LEAPS, okay? If we look at VIX, you can see that the VIX is in the zone of confidence and greed begets more greed. When the market goes up, people just chase and buy more. Okay, the FOMO becomes real, and that's kind of what we're seeing. So I do expect the VIX to trend downwards, and we may even see this thing get as low as $12, like in the past. Okay, so that's what I'm expecting. But if we do get a nice blip up to 20, right, with a little pullback on QQQ, that's going to be our area to be loading up on these LEAPS, okay? So you have to be patient for these entries. You may get them later this week. You may get them early next week, but I think this entry will be coming. And when it does, you gotta load the boats, okay? So let's go ahead and dive into the 3 stocks. Before we do, if you do wanna make multiple 6 figures trading options and you want my direct help, as well as 90 other high-level investors in our mastermind, click that first link in the description. You could even watch some of our recent client testimonials, like Sean making $79,000 in 26 days. And if you do want my free trade ideas, I give away those on Instagram and my free newsletter. So make sure to be subscribed to both of those down below in the description, okay? So the very first stock, I'm gonna go from kind of slower mover to the fastest mover. So you're gonna get the most bang from your buck on the third stock, but I do like this first stock, and this is SoFi, okay? This is more of a safer LEAPS play. You're still gonna get more movement upwards than you would on like a Mag 7 stock like Apple or Amazon, but SoFi is definitely more of a safer play, okay? So SoFi, if we get into the fundamentals of the company, wonderful fundamentals. I only buy LEAPS on companies that I really like, have good fundamentals, great charts, upward trending for the past 3 years minimum, and then also good premiums in the options. But as you can see, PE ratio 33, market cap 15 billion. I believe this could be a 100, maybe even a $200 billion company in the next, 3 to 5 years. And, there's lots of opportunity with SoFi being in the online banking sector and really taking advantage of the student loan market cap, and as well as, many other services, okay, being an online bank. If we look at their Q1 report, quarterly reports, adjusted net revenue up 33% year over year. So double-digit growth, right? Record 771 million. Adjusted EBITDA up 46% to a record 210 million. So this company is double-digit growth, right? This is what we want to see. A small market cap company, double-digit growth, low PE ratio. That is just a recipe for success, okay? So as far as the stock goes, all right, wonderful. It's down, right, from all-time highs. All-time highs were back up at $18.43, and we are down about 23%, okay? So what we're looking for is actually a pullback from this $14 level today down somewhere to this $13.80, anywhere between $13.20 and $13.80. This green box right here is kind of what we want to see, a nice little pullback there, and that would be a decent entry on some LEAPS call options on SoFi. So we can go ahead and talk about which strike. We can go into my account, and we're going to go ahead and go to the options chain. And what I'll do is I'll go out probably, let's just say, to June 18th, okay, 400 days out. I typically stay 365 days out or further to give myself ample amount of room to be right. So we're going to go to June of next year, and I would go ahead and pick up the 70 deltas, which would be the 12 strike, okay? So you could pick one of these up for $465, right? And I would just load up on these contracts at the 12 strike and, hold these until, potentially we reach all-time highs again on the stock. So you can, buy them here. And if you want to get out maybe at $16, that's fine. Or if you want to wait till 18, that would be kind of the next play. So maybe you have 10 contracts, you release 5 at 16, and you release the other 5 at 18, okay? So that's going to be a great LEAPS options play. Now, the next play is going to be a little bit more volatile, but you're going to get a lot more bang for your buck, and that's going to be in Robinhood, okay? Robinhood is a massive brokerage company. Obviously, most people use Robinhood, especially millennials. This is a wonderful company. Earnings per share, or actually price to earnings ratio is 35, so extremely low for a company that's in a high growth sector that's now getting into the banking sector and attracting customers via their gold membership, which is crazy that a brokerage has a recurring revenue type of income stream. You don't see that very often on brokerages, but Robinhood is a great company, okay? So if you look at their net margins, 36% this quarter. Last quarter, 90% net margins, so that's definitely what we want to see. And if we look at their financial statements, revenues up 50% year over year, double-digit growth, right? What I do like also, their diluted EPS is up 106% year over year, but their board of directors increases share repurchase authorization from 500 million to 1.5 billion. So they're buying back their stock, which is also causing it to go up. So that's exactly what we want to see. It's a recipe for success. So if we look at the chart, we are flirting with all-time highs here, okay? So it's not the best time, especially at the upper Bollinger Band, to be getting in LEAPS at this time. Now, could we go higher? Sure, but I do expect when the overall market pulls back, we are going to see a pullback to this level right here, okay? So what I'm looking at is, Robinhood getting to this $58 level, $59 level. If we hit that $59 level, I will be eager to buy some LEAPS options. Anywhere between 59 all the way down to 54. This would be a wonderful buy zone for some LEAPS, okay? Now, if we go into the options chain, right, we're going to go to Hood, and I would go out June 18th, 400 days. 70 delta would be the 55 strike, and that's going to cost you about $2,100 for those, okay, per contract. And where would a good exit be? Well, an exit on Hood would be, you grab it at somewhere here. Let's just say, worst case scenario, you get it in the 59 area. Best case, you get it in the 54 area, okay? But from 59, I would probably ride this thing back up to at least 67 all-time highs, and then give it some room to break out from there, okay? So if we break out from all-time highs right here, okay, at 67, we're most likely going to be headed to the $70, $75 range, somewhere up here. So I would, probably exit there, or, if you like it for a longer-term synthetic stock position, you can hold it for additional time, okay? But that's going to be the exit point there. Entry point will be here, and you could see the RSI is already starting to kind of climb down a little bit. We had some selling volume today, and maybe we see a little bit of a rollover if the overall market rolls over, okay? So that's my second play that I'm really keeping a close eye on. And mind you, any of these stocks can pull back, separate from the market. These can just pull back on their own, but if the market pulls back, that will be a better opportunity because most likely these stocks will also pull back as well. Okay, now the last stock is gonna be the high flyer. Highest risk, highest PE ratio, but the most bang for your buck, but you definitely have to have the stomach to withstand the volatility. Now, this is going to be Hims & Hers Health. So Hims is the ticker. I really love this company. Triple digit growth, 80 PE ratio, okay, in the health services sector. I believe this company, they're at a $13 billion market cap. I believe it could easily either be acquired by Eli Lilly or Novo Nordisk, or they will go to a multi-$100 billion market cap pretty easily, okay? So obviously in a due amount of time. And the Q1 report, 2025 report, revenue up $586 million, up 111% year over year, triple digit growth. So this is a triple digit growth company with a decently low PE ratio in the 80s. That's not too high, especially in the healthcare sector and that kind of stuff. Usually in that sector, we see some high PE ratios. So this is very good, right? Profitable company. And the stock has rallied quite a bit. Now, we've started to see a small pullback today. I got into some cash secured puts, but right now is still not a LEAPS level entry area to enter some LEAPS. Now, what I would be looking for is at least this stock to get below 59 this week. Somewhere in this range would be better, 57, 56, somewhere in that range. But if it does pull back there, okay, if it does pull back into this zone, that would be a good opportunity to hold some LEAPS for a longer term time horizon. So, and I would ride these up past all-time highs. So if I'm, all-time highs is at 73, right? Let's just say we get in at 60 or 57, okay? I would definitely ride this thing up back to all-time highs. Expect kind of a double top situation if we get there. And if you want to ride that out, you could ride it up above that, but I would probably get out somewhere around $73, okay? Now, if we go to the options chain, okay, we're going to go to Hims. And on this one, you could go a little bit further out to because it's more volatile. If you want to just give yourself ample amount of room to be right, you could go out 611 days. That's fine. Maybe build a long-term stock position, synthetic stock position. That would be fine. But if you do want to go for the June 18th, that's okay. And you could go for the 70 delta, which they don't have 70 deltas because the stock moves so fast that, there is none at this expiration. So I would probably just go to like anywhere between 73 and 76. I'd probably go to the 50 strike, pay $2,800 and get into those, okay? So that's gonna be, for every dollar this stock goes up, you're gonna make 76 cents. Obviously, the deeper in the money it goes, the more you're gonna make. But I'll probably go for the 50 strike just to be safe. And then I would ride this thing up to 73, okay? So that's gonna be kind of a shorter term target to get in and out. If you do wanna build that synthetic stock position, again, you could hold these for longer, but I like to take my 40 to 60% profit and get out. Now, if you enjoyed this video, please give it a thumbs up as that helps this video get boosted in the algorithm to other people. And I appreciate you being here. I'm gonna link another video right here you can watch, and take care.